So I saw some interesting data on India's GDP for the third quarter of fiscal year 2024-25. It seems like things are, stable, but maybe slowing down a bit.
Yeah, actually, that's pretty much spot on. The numbers confirm what the government and Reserve Bank of India have been projecting: stable, but with a bit of a deceleration in growth. It's like driving on the highway. You're still moving forward, just maybe not as fast as you were earlier.
Okay, so what's causing this slowdown? I mean, is there one big thing or is it a bunch of smaller factors?
Well, there were some concerns about a manufacturing slump earlier in the year, like July to September, but things bounced back in October to December. So that's a positive sign, right? However, investment is still, kind of sluggish.
So manufacturing is recovering, investment is slow. What about consumption? I guess people need to be buying stuff for the economy to really grow, right?
Right, exactly. Consumption growth had slowed down too, which was a worry, but that's also picking up now, even before the tax breaks in the budget and the repo rate cuts from the RBI. It's kind of like a domino effect. One thing impacts another.
Interesting. And what about exports? Are we selling more stuff to other countries or is global trade kind of messing things up?
Exports have actually been performing pretty well, despite all the global trade fragmentation we're seeing. It's like finding a niche in a really crowded market.
So if exports are doing well, but investment is still slow, where should policymakers focus their attention then?
The key is really domestic consumption, getting people to buy stuff here at home. The note mentions that policies targeting domestic consumption are about the best defense we have in this uncertain global environment.
I see. So it's like, let's focus on what we can control instead of worrying too much about what's happening elsewhere, right?
Exactly. And reviving rural demand is crucial, but that's really dependent on climate events. So interventions to support real incomes and retail credit are key, which, they actually announced this month. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Makes sense. So overall, is this GDP data something to be worried about, or is it just a normal part of economic cycles?
I think the economy's resilience should eventually calm investors who were rattled by tensions over international trade. The markets corrected a lot since September because of concerns about India's slowing economy and the potential for trade disruptions.
So the market overreacted a bit, maybe?
Seems like it. The note actually mentions that the first worry, the slowing economy, appears to be overdone, and the second one, trade disruption, could even work to India's advantage since we're not on the front lines of this trade war.
That's an interesting perspective. So we're kind of sitting this one out and potentially benefiting from it.
Exactly. We're better placed because of the size of our domestic market and will continue to be among the fastest growing economies, even with a deteriorating external environment.
Okay, so to summarize, Q3 GDP data shows things are stable but slowing. Manufacturing is bouncing back, consumption is reviving, but investment is still lagging. Exports are doing well, but domestic consumption is really the key to mitigating external risks.
Right. That's a great summary. You've got all the key points.
So, looking ahead, what are the big things to watch for in the next few quarters? What could really move the needle one way or the other?
Well, the press note emphasizes that improved data coverage and revisions in input data from source agencies will have a bearing on subsequent revisions of these estimates. So we should keep an eye on those revisions as they come out.
And when can we expect the next set of numbers then?
The provisional estimates of annual GDP for fiscal year 2024-25, along with the quarterly GDP estimates for January-March, which is Q4 of 2024-25, will be released on May 30th, 2025.
Got it. So more data to look forward to in a few months.
Exactly. It's like waiting for the next chapter in a book, You've got the broad strokes of the story, but you're waiting for the details to unfold.
Now, let's shift gears a bit. The press note also mentions revisions to previous year's GDP estimates, specifically for 2022-23 and 2023-24. What's the story there? I guess these revisions help us get a clearer picture of the past, right?
Absolutely. These revisions are essential for refining our understanding of economic performance. The first revised estimates for 2023-24 use detailed industry-wise information, which is much more comprehensive than the initial benchmark indicator method.
So the initial estimates are kind of like educated guesses, and the revised estimates are based on actual concrete data.
That's a perfect analogy. For 2022-23, the revisions incorporate incorporate the latest data on agricultural and industrial production, government budget figures, and comprehensive data from organizations like the Ministry of Corporate Affairs and the Reserve Bank of India. It's like updating a map with new satellite imagery.
Okay, so what were the major takeaways from these revisions? Did they significantly alter our understanding of those years?
Yes, they did. For example, the real GDP growth rate for 2023-24 was revised to 9.2%, which is the highest in the previous 12 years, except for the post-COVID year of 2021-22. This was driven by double-digit growth in manufacturing, construction, and financial services.
Wow, 9.2% is pretty impressive. So those sectors really powered the economy that year. What about 2022-23?
For 2022-23, the real GDP growth rate was finalized at 7.6%, with significant contributions from trade, hotels, transport, financial services, and utilities. It's like each sector playing a crucial role in a well-coordinated orchestra.
So different sectors led the growth in each year. It sounds like these revisions provide a much more nuanced picture of economic performance. Were there any significant changes in the gross value added GVA estimates as well?
Yes, the nominal GVA at basic prices increased by 11.2% in 2023-24 compared to 13.9% in 2022-23. Real GVA increased by 8.6% in 2023-24 compared to 7.2% in 2022-23. These figures give us a clearer sense of how different sectors contributed to overall economic growth. If you're enjoying this conversation, folks, don't hesitate to like, share, and subscribe to the YouTube channel.
Okay, so higher growth in GVA for 2023-24. Are there other key aggregates impacted, like national income or consumption expenditure?
Absolutely. Net national income, NNI, at current prices grew by 12.7% in 2023-24. Gross national disposable income, GNDI, grew by 11.9%. These figures give us a comprehensive view of the overall economic landscape.
Got it. So national income and disposable income also saw significant growth. Any changes in savings and capital formation?
Yes, gross saving during 2023-24 is estimated at 92.59 lakh crore rupees, with a gross saving to GNDI rate of 30.3%. Gross capital formation, GCF, is estimated at 94.68 lakh crore rupees, with a GCF to GDP rate of 31.4%.
So the rate of capital formation is slightly lower compared to the previous year?
Yes, but it's important to note that the rates of capital formation in recent years have been higher than the rate of saving due to positive net capital flow from the rest of the world. It's like attracting investment from overseas to boost our economic activity.
That makes sense. What about consumption expenditure? Any notable revisions there?
Private final consumption expenditure, PFCE, at current prices grew by 9.7% in 2023-24, while government final consumption expenditure, GFCE, grew by 12.6%. These figures indicate healthy consumption patterns in both the private and public sectors.
Okay, so consumption is still a key driver of growth. It's like the engine that keeps the economy moving forward. Now, let's dig a bit deeper into the reasons for these revisions. What specific factors led to the changes in the GVA estimates for 2023-24?
A major factor was the revision in agricultural output estimates based on the final estimates from the Ministry of Agriculture. There were also revisions due to the incorporation of detailed data from source agencies and government budget documents. It's like refining a recipe with more precise measurements and better ingredients.
So, more accurate agricultural data and detailed financial analysis were key. What about the revisions in the GVA estimates for 2022-23? What drove those changes?
The revisions for 2022-23 were influenced by updated production estimates for horticulture crops, increased input value due to the cost of cultivation survey, and the use of final results from the annual survey of industries. This level of detail helps us paint a more accurate picture of the past.
Okay, so both years saw significant revisions due to more comprehensive data. To summarize, the revisions show strong GDP growth in both 2022-23 and 2023-24, driven by different sectors and influenced by various factors.
Exactly. And these revisions highlight the importance of relying on detailed industry wise data for accurate economic assessments. It's like zooming in on a photograph to see the finer details.
So, where can our listeners find more details about these revised estimates and the data behind them?
The press note includes detailed statements with all the key aggregates, growth rates, and sector wise contributions. It's like a treasure map for economic data enthusiasts.
Great. So, there's a lot of information available for those who want to dig deeper.
Precisely. It's like having access to all the ingredients and the recipe to understand the economic meal we're serving. Well, that was a lot of information, but hopefully it gives everyone a clearer picture of India's recent economic performance and the factors driving it.
Definitely, it's always helpful to understand the context and the nuances behind the headlines. Thanks for breaking it all down.
Anytime, it's like unraveling a mystery, one data point at a time.